Welcome to the daily update, where I'll go over the action in the market for Monday, March 11th, and then we'll see how things look for Tuesday, March 12th. It was a down day. We're seeing some potential weakness really coming in, and we saw a lot of technical alerts being triggered to the downside in Monday's session, but there weren't any economic reports that came out. We were below average with volume. You can take that as positive since we declined on Friday and we declined on Monday on below average volume. That's usually a good thing. But the market's really waiting for CPI. So in Tuesday's session, it's not the hokey pokey. It's all about the CPI. And that's really leading up to what the market will hope can generate some kind of a scenario going forward from here. But for right now, we're hanging in there. We're still positive with our technicals. We are seeing some areas of concern, but we always see those. A good solid update could take care of that. If we see some more weakness, it's going to turn things more negative. So let's go back and talk about what happened. Right at the open, we did a gap lower open. The futures ended up being quite negative as things were really weak in Japan. They set that high going back to 1989. They surpassed that and then saw a real big downturn. That kind of fed over into the European session, which fed over into the open in the US. And prices ended up falling to S1 at 5,098. So we did go under the 4,100 level. And we set the low for the day. So a lot of the real damage was done right off the bat. Remember, it's the amateurs who open the market. It's the professionals who close it. Some of the things that I saw over the weekend, there's just headline after headline on YouTube and in the financial media that the market's going to crash. We've hit a top. We're going to get set to go down now. Well, we did go down, but we spent the rest of the day kind of repairing the damage, and we're not really falling apart all that much. As the day went on, we chopped back up to the unchanged level. That acted as overhead resistance on a down day, and then we just closed slightly below that. So it really wasn't that big of a down day. We saw a decline on Friday, but it wasn't that much. It was just a little bit over 0.5%. And then we saw another decline in Monday's session. So for right now, it's still looking like a pullback. We were down 0.11% on below average volume. We are still positive with our technicals. We're pretty much working off this extreme positive condition in the short term. We still have some things to deal with in the intermediate term. That takes a little longer to work out. We're still looking extreme in the long term with our moving averages that we've been following. And in Tuesday's session, it'll all be about inflation and then what's that going to do to interest rates with the CPI report. If it comes in market friendly, we could see a nice real bounce out of this. If it comes in hotter than expected, that could lead to a decline. The frustrating thing will be is if it comes in mixed, where part of it looks good, part of it looks bad, and then the market's not really sure what to do with that. And of course, we have all this list of geopolitical events. And it's really interesting, the disconnect between the stock market and the world right now. I mean, there's so many things going on in the world that could be taken as negative. But at the same time, the stock market's like, hey, everything's just fine. We're really happy about things. It's interesting to see that play out. Some comments that we can make. This is another day when we saw the mega caps and those semiconductor stocks and related semiconductor stocks. They did underperform. The broad market is really hanging in there and it's doing better. And I have some charts to show how that has been improving. And I've been showing those charts before. That's continuing for right now. We have a pretty short list with our short-term indicators that are extreme positive. In fact, we have a new addition, the 20-period exponential moving average. Yeah, we've been going down lately, but we're still above that exponential moving average. So it keeps going up as long as we're above that moving average. And now we're starting to get extreme. Our stochastics are still extreme as well. In the intermediate term, a little bit longer list. We also have the 50-period exponential moving average that's starting to get extreme. We're still getting very high readings from all of our different oscillators. The bullish percent index, it had gone up in Friday's session above 70, and that was seen as positive. Well, it came down in Monday's session, and now it's dropping, but it hasn't fallen below 70 yet. The Sean trend meter, It's declining, but it's still extreme. And our longer term new high, new low study for the S&P, that's still extreme positive. And the fact that this has been on the list for so long, that's positive for the market too. We're just camped out up there, and it's showing that the market has good momentum and good internals, even when we have some down days. Long term, we have not only the 150 period simple moving average, but now we have the 200 period exponential and simple moving average that are looking extreme positive. And we're still dealing with this scenario. We'll see if Tuesday's session can clarify that or change it, or at least keep it the same, that the Fed is probably done raising rates. At some point in 2024, they're going to cut rates. The big variable is we don't know when and we don't know how much. The dollar was up and interest rates were also up. We ended up closing at 4.1% for the 10-year yield. That did put some pressure on stocks. We still follow the yield curves, the 10 to the 2 and the 10 to the 3 month. Those are still inverted. We did really sink down a bit more with sentiment. You had a lot of folks that were quite exuberant about the market. We got above that 75 level. Then we dropped down to 71 on Friday. We dropped down to 67 in Monday's session. Our trend, not a lot of changes here. We are positive. The green line's on top, but the ADX is having a really difficult time getting above the moving average. So it's a weakening trend, but it's a positive trend. However, it still is a trend because we are above 20. With the down day, we're still negative, and I'm keeping right now our momentum mixed to positive. We still have more of a positive backdrop. This is still looking more like a pullback. And as I point out from time to time, the bias and the momentum, these are the parts of the video that are my opinion, where I try to let everything else just speak for itself. So you kind of have to take this. You might either accept it or reject it, depending on your stance. We didn't have any economic reports on Monday, so we don't have any charts to show. Here's a few charts that I picked up at Isabel Net. This is just talking about volatility. And when we have a down to a 3% dip, we see, which is only standing to reason here, we see more volatility. The bigger the decline, the less the volatility that we see. And that's just kind of common sense and something that we probably already knew about, but this just shows you a graphical representation of that. We are going up a little bit with our insider transactions ratio. Now, these are legal insider transactions. This is CEOs and corporate officers. They're starting to buy more stocks. We're not necessarily at an extreme reading, but it is going up. And then we're looking at mega cap growth and tech positioning. When you take both of them together, there's a lot of people in there. And that stands to reason. It's been the best performing area of the stock market. But when we get above this purple line, this means that we might be seeing maybe too many people getting involved in this part of the market. Then, even though we're seeing a decline here with the NASDAQ 100 futures, and these are highly leveraged types of investments, they're still positive overall. It has been coming down, but we're still positive when you take all of this together. And these are folks that are usually professional asset managers, and they also are involved in leveraged funds where you have a 2-to-1 ratio. The fact that this is still positive is kind of hanging in there right now for the NASDAQ 100, but just know it's also declining at the same time. And then, I'll go over this again in the weekend video when I go through the intermarket analysis video. This is when we talk about PE ratios. We usually look forward to say, okay, this is what we're looking at going out into the future. Well, this chart is just showing when we look back, when we get a trailing or TTM, the trailing 12 months, when it becomes over 25, that's when the market tends to shift into a more bearish stance. And we're coming up, we're above 20 over here on the right-hand side. And over the weekend, the current trailing 12 months is 23.27. So we're not at that 25 level yet. And we may get up there and even last for a while. We don't use this as a timing mechanism. We use this more just to get an overall evaluation of the condition of the market. And yeah, it's expensive, but it'll get really expensive if we end up going above that 25 level. And then looking at the semiconductors relative to the S&P, Yeah, I mean, the semiconductors, they're one of the best performing industry groups inside of the tech sector, and they've really been doing quite well lately and really outperforming the S&P. I go over this in the intermarket analysis video each weekend, just the semiconductor sector industry group. And then looking forward, we talked about PE ratios going back. Now this is looking forward. And I also go over this in the weekend video, but there just seemed to be a plethora of different charts dealing with this. We're above this 20 level when we're looking out. So that means that we're expensive even when we look out on a forward basis. What's going to give here? If earnings go up, that'll push this down. Or if price comes down, that'll also push this down as well. But we've been above this before and we can stay above it for a while. We just want to keep an eye on this area. And I do go through this at least on a weekly basis. I didn't really find any charts of interest on Twitter. Usually I spend a little more time on the weekend. There just didn't seem to be anything all that interesting. Here's our intraday chart where we gapped lower and we came down to S1 and we found some support here, and then we chopped our way back up. We hit the unchanged level that acted as overhead resistance, and we trailed off a bit going into the close. Here's our intraday chart where we were seeing a little bit of weakness as things closed on Friday, and then we saw some more weakness as things opened up when Europe opened and the futures were down. And then we did see a bit of a bounce here. We saw our low set right after the open. And then we're seeing things a little bit positive now. We're up right when I started recording, we were up about a third of a percent, but it's still many, many hours before the market even opens, and Europe hasn't even opened yet. And this is one area of concern, and I went through this in the what to watch video. We're seeing the blue line going down and the red line actually going up now. So growth is starting to underperform on an intraday basis, which is kind of what you see when you're seeing pullbacks. But we want to watch this. If we have a good solid update, we want to see the blue line going up. If we see more weakness, we'll be watching to see if the blue line continues to go down. Also on an intraday basis, looking at growth of value, it is showing weakness. We hit that top in Friday's session, and we've been seeing growth really underperforming ever since then. And that is a bit of a concern. When we look at our end of day chart, growth was down where value ended up being up, and growth was down more for the mid caps and also down more for the small caps. But we're still hanging in there. When we look at our small cap growth to value ratio, it is declining, but after breaking out, it's been more or less chopping sideways. And then with the mid caps, it also declined. We did set an all-time high last week, but this is still seeing an overall upward trend. And we're also declining here with the S&P growth to value ratio on end of day charts where it's falling back, but it's still in a longer term uptrend. If we do get some kind of a bounce, if things really start to go up, we want to see this turn and go up as well. What's really going to be telling is if we do get a bounce in the index and these ratios keep going down. Now, it'll also be telling if we see a decline and this also continues to fall. When we're looking at discretionary versus staples, yeah, it's doing okay, but not great. We look at the ratio on the bottom. It did decline in Monday's session. We are still in a more of a solid uptrend with discretionary, and that's giving us the upward trend with the ratio. Where we were up with staples, but we're starting to see a death cross here when we just look at staples by themselves. Here's our trend. We're still below the moving average with the intermediate term chart. The green line is still on top, so we're positive. The ADX is above 20, so we're in a weakening positive trend. We're also dropping a little bit more below the moving average in the short term. The green line's also on top. We're still in a weakening trending environment. We are dropping off with volume. We've seen 2 days now in a row of below average volume. Here's the weekly chart that we look at of sentiment, where this is a little old now, where we were starting to look more extreme positive as far as how people were feeling. We have now dropped into more of this yellow area when we look at our charts. But with the down day, we're seeing the VIX going up, and we're still seeing this series of higher lows. And we've been seeing that since the early part of December, not only on the line chart, but also the bar chart. With the down day, we're seeing the volatility of the VIX starting to pick up as well. And we're seeing the momentum of the VIX start to go back positive. That means overall that the MACD is showing that the VIX is going higher. The equity put call ratio did go back up. And now after Friday, we were still going down. Now it's really hard to see, but we're turning back up with our 5-period equity put call ratio. But when you look at the advanced decline lines, we're holding up. We're actually positive based on price and volume. So internally, this is showing some strength. But when you look at the new highs, new lows, yeah, we're having more new highs than new lows, but it's really dropping off. We're starting to drop below the moving average with our 5-period, and we're turning down now with our 10-period moving average. But this is also positive with the advanced decline ratio. We're setting a series of higher lows and we're above zero. So this is showing internal strength so far. Accumulation distribution actually turned up just a little bit and we're still above the moving average. This is another concern, and I brought this out in the what to watch video. We are declining with the Chaikin money flow. This is also measuring what the smart money is doing. We're seeing the red line coming down. We want to see this green histogram start to go back up and actually turn the red line up if we're going to switch back and look more positive. And very similar to that is the Chaikin oscillator, which it's still above zero, but it has been declining. This is showing the cumulative advanced decline line for the S&P 500. This is still looking pretty good. It's still breaking out based on price. It hasn't quite gone above these highs set back in 2021, but we're also looking pretty good based on volume. So this is still showing some internal strength. Also with the NYSE cumulative advanced decline line, and I brought this up in the what to watch video, we're still going up, both with the cumulative measure and with the regular advanced decline line. So that's showing more broad-based positive action. Here's another NYSE advanced decline line, also breaking out, not quite back above where we were in 2021, but still in a more solid uptrend. And when we look at common stock on the NYSE, we're still going up based on price as well as volume. We negated that negative divergence that we were seeing, and now we're seeing volume really kicking into gear. Looking at our advanced decline line studies, we were pretty much flat here with the NYSE common stock. We're still going up with the S&P, a bit of a decline with the mid caps as well as the small caps, and the small caps continue to lag behind. Here's our daily chart. We're still below this upward sloping trend line. And down at the bottom, we did drop to below average with volume. We're still above the 20-period simple and exponential moving averages. If we start to see a decline, this is what we're going to be watching. We're not only going to be watching it for the S&P, we're going to be watching it for the NASDAQ 100 as well. But so far, we're above this level. This is suggesting that what we've seen up to this point is a pullback. And we are starting to get extreme with our 20, 50, and 200-day exponential moving averages. Because the S&P is above all of these moving averages, that's why they keep going up. And when we get above this level, there's really no magic about this level. We just want to be aware when they're giving us a reading that's as high as it is right now. The Force Index did decline, but it's still positive. And in the short term, we're no longer extreme with the short-term stochastics. We're turning down, but still extreme in the intermediate term, turning down and still extreme in the long term. We're not extreme with our standard deviations chart. We're right on the border between the +1 and +2 standard deviations channel. Intermediate term, we're actually turning back up with the balance of power, and we're above zero, where we had been seeing this decline. We're still looking positive with the darker blue bars with the go, no-go system. We're still above the midpoint with our highest high value. The TTM squeeze actually switched over to a lighter shade of blue. When it's darker blue, that's negative. When it's a lighter shade of blue, that's turning more positive. The ease of movement is pretty much flattening out, but it's not necessarily declining either. We did see a little bit of a decline with our Arun, and it's no longer extreme positive. It's not far away from being extreme positive, but it did see a little bit of a decline. However, it still remains positive. We did come down with the McClellan oscillator for the S&P, but we're still above zero. So when we look at the summation index, we're still going up based on price, and we're looking even stronger based on volume. That is showing some internal strength. We did decline with the NYSE McClellan oscillator, but we're also still above zero. So we're going up based on price and looking even better based on volume. That is encouraging. We saw a slight decline here with the Swenlin trading oscillator based on price. We ticked up just a little bit based on volume. However, when you take these together, they are positive since they're above zero. And our oscillators just haven't been really helpful lately. They've been just chopping more or less sideways after giving us really extreme readings. When we break them down, we're still advancing based on price and volume above their moving averages. We ticked up just a little bit with the PMOs that are rising, also kind of going higher with the buy signals and still going up with the PMOs above zero and starting to get into this extreme positive territory here. We still remain neutral with the Elder's Impulse system for the S&P. We're still positive with the parabolic SAR. The slope oscillator trying to be a little bit more positive now, but pretty much chopping sideways. The MACD is looking a little more negative, dropping below its moving average. So we're just flatlining here in the short, intermediate, and even the long term. And whether we're a little bit above or below the moving average denotes whether it's a little more positive or negative. We're still above all of these moving averages. Here's the 20-period moving averages that we will be watching if we see further weakness. And after going up in Friday's session, the bullish percent index did decline. If it drops below 70, that's an official sell signal. And the NYSE bullish percent index just really was pretty much unchanged. It's still above 50, so it is still positive. But we're seeing a decline here with the NASDAQ 100 bullish percent index. This is where the profit taking is really happening, and so we're seeing a lot more of a negative reading with this particular indicator. The money flow is flattening out, but it's still above 50. The ultimate oscillator also flat, but above 50. We're turning back up slightly with the vortex. This is another chart that I pointed out in the What to Watch video as we were seeing this looking exhausted as it was setting a series of lower highs. Well, if this can turn and really start to go back up, that would be more positive. We're still positive with the RSI 14 and 9, even though we're seeing a bit of a decline. All of the recent readings have been above 50. And we decline with the on-balance volume, but we're still above the advancing moving average. When we look at the stocks above their 20-period moving averages, this is showing a little bit of an improvement. And as I also tried to point out over the weekend, we're seeing something positive and negative here. We are seeing an improvement with this overall indicator. That's positive, but we're also still wondering about this negative divergence. And then also kind of on the negative side, if we get above this blue line, that's going to give us an extreme positive reading. And we're starting to see that extreme positive reading with the 200-period moving averages. So for right now, this negative divergence, that's gone now. We've been able to exceed this previous reading that we've had. We're still seeing this negative divergence with the 50-period moving average study, although it still continues to improve. The Copic curve, who knows where it is right now. Sean trend meter declining, but still extreme positive. Watching these other levels of possible support with our 20-period simple moving average of the open, high, low, and close. We haven't quite come down to any of these lines yet in this mini rainbow. This would be the high. The green line is the high that may be acting as a little bit of possible support. Keeping an eye on the fib retracement levels, this has been readjusted to allow for the new all-time high. We'll be watching this if we start to decline to see if we're really going to fall down to this 38.2% retracement level, but we're just watching that for right now. With our different charts, the Heiken Ashi is looking a little bit more negative with a black candle. We're still positive with the Kigi, but now we're pointing down. The Renko just goes along merrily looking positive, and we're still looking positive with the 3-line break. When we're looking at our trend line, we're still below this trend line here. We've not been able to recapture that yet. And we're coming up in Thursday's session. We will be starting a new 50-day cycle, just informational for the most part. We don't know if that's going to produce some kind of a shift or a change. Sometimes it does, sometimes it doesn't. I just like to be aware of this. And we're still a little bit above this pivot point here when we look at the weekly chart of the S&P. We're at 51.17. This level is at 51.10 to 51.11. So we're just not very far above it, but we are still above this. There's a real tug of war going on right at this level. Other times when we hit these pivot points, that ended up marking some kind of a reversal. We're still wondering if that's going to happen this time. And then looking at our longer term moving averages, we're continuing to go up with the 150 and 200 period moving average study. The other indexes, we're still positive with the Keller market model across all time frames and all the different indexes. I wanted to show this again here. The decision point scorecard did have a new change on the 5th of March, where the short-term PMO signal has crossed over and it's getting flapped around. That's one of the indicators that we look at, the PMO, and it's a little bit above, a little bit below. And so this is kind of going crazy right now, but it's still positive in the intermediate term. It's negative in the long term. And then look at this list, and it's all red. These are all negative technical alerts that happened in Monday's session. And I had to scrunch this down so much, you can't even read this thing. And I don't even know if I was able to get all of them on there because it was bigger than the slide. But this, a lot of technical damage was done on Monday. Now we can get that back if we have a solid update, but this is causing some concern right now. It's like they just hit the repeat button over and over and over again here. The equal weight index is still having a tendency to outperform the S&P 500 weighted index, so that's showing more broad market participation. The equal weight ratio to the S&P 500 is declining. That means the mega caps are underperforming. The Dow is now underneath this pivot point, and it was actually up just a little bit on Monday. And we switched over to positive with the diamonds for the Elders Impulse system. We did see a decline with the NASDAQ after hitting this R1 level. These pivot levels have been pretty influential when it comes to the NASDAQ and NASDAQ 100. If we see more weakness, we'll be following this pivot point. And the NASDAQ 100 also declining after hitting this R1 level. We'll also be watching this pivot point if there's further weakness. We switched over to negative with the QQQs when looking at the Elder Impulse system. The momentum for the NASDAQ 100 is continuing to be negative. We have a longer-term negative divergence as the NASDAQ 100 was going up. We're starting to develop a shorter-term negative divergence here as the NASDAQ has been setting recent all-time highs, but the momentum has been really trailing off. This is another area, the QQQs were just barely above the 20-period moving average now. It acted as support last week. Is this going to act as support this time? But longer term, both short and intermediate term, we are in an uptrend and we're above the 200-day moving average. So the long trend is still positive, long-term trend. This is the other area that's really in a tug of war right now. The ratio between the NASDAQ 100 and the Dow, we did decline a little bit and we're right about on this red line. This is the previous reading that we were getting. If we can break above this and set new highs, that would be quite positive. If this ends up acting as overhead resistance, that could lead to things turning more negative. The small caps, yeah, they were down. Yeah, pretty much. But they still remain neutral with the Elders Impulse system for the small caps. We are still positive with the RSI, even though it declined. The bars have been looking better, but we've seen a couple of weak days now. The longer-term trend is positive, and even though the momentum continues to be positive, but we're just not seeing a lot of follow-through upside action. And we're seeing a real underperformance with the small caps when compared to the S&P. That's been a lot of the buzz and some of the headlines I've seen is it time for small caps? Should we get in? Well, when you compare the small caps to how they've been performing with the S&P, unless you're an absolute bottom fisher, I would want to see a lot more confirmation of strength that we're actually seeing some follow through because we've been faked out so many times now with the small caps. That's where I stand though. The mid caps also pulled back and dropped below this pivot point, and we're still remaining neutral with the mid caps when looking at the Elders Impulse system. This is another ratio we're keeping an eye on. This is the QQQs or NASDAQ 100 to the IWM or the small caps. If this is going down, that means the small caps are outperforming the QQQs. That would be quite negative. And so far, we are seeing this coming up to this recent high level and starting to come back down. Google, this is somewhat encouraging. It was able to bounce up off of its 200-day moving average. It has a ways to go to turn back more positive, but for right now, support has been holding. Apple is really getting close to a death cross. It was up in Monday's session, but it needs to climb above both of these lines to turn back more positive. And Tesla was also up. It's like the strong stocks were down, the ones that have really been doing well, and the weak stocks were up in Monday's session. But we're still dealing with a negative trend here when we look at Tesla. The FANG index ended up declining over 1%, but it's been chopping sideways and it's still in a longer term uptrend. The financial sector was up slightly. and that's still hanging in there. So we look at New York Community Bank, it was down almost 5%. It's just chopping all over the place. And we're not watching this so much for the price. We're watching this to see if there's going to be other banks that are going to come out and say, uh-oh, we've been having some problems too. The dollar ended up ticking back up a little bit in Monday's session, so that put some pressure on stocks. We did go up with the 10-year yield. That also pressured stocks. We went down with the 10-year based on price. And then looking at our growth to value ratios, we are seeing some weakness here. The Qs are underperforming the S&P. We saw a bit of a bounce up, but we're still below a declining moving average when we look at discretionary to the S&P, and we're seeing large cap growth declining when compared to large cap value. So with the large caps were declining, the mid caps fell below the moving average. We did decline with the small caps, but we're still above the moving average. We're still looking good here. This is a longer term indicator when we look at the 5-period moving average of the highs minus the lows across the Amex, NASDAQ, and NYSE. This reading is still positive. And we're still looking positive here with the 10-period average of the S&P 500 highs minus the lows. This has been camped up here for most of 2024. We had a brief dip down when we had some earlier weakness in the year, but for the most part, this staying really high right now, that's positive for the market. So what's our outlook for Tuesday? We're still positive, and right now it still looks like a pullback because not only are we not seeing a lot of convicted selling, we are pulling back based on lower volume. We're still above that overhead resistance level, not by very much, but we're still above it. We should be going through a period of weak seasonality. Monday's session had positive seasonality and we were down. So we're just kind of taking that for what it is right now. We are wondering, is some weakness developing? We are seeing some technical alerts in some areas that could be developing some weakness that will become even more pronounced if we see more selling coming into the market. We're going to get the NFIB small business optimism. It's not a real influential reading here. The big one is going to be CPI. After the employment situation report, the next most important economic report is CPI, and that is huge. Then we want to keep an eye on all the crazy things that are happening in the world, even though the market is not really paying attention. Wednesday is going to be pretty light with just the weekly mortgage applications index. We're going to get PPI and retail sales on Thursday, 2 major reports coming out on the same day. We'll get industrial production and capacity utilization on Friday, as well as consumer sentiment. And then here's blocking off the different things, the different types of CPI reading. There's also going to be a 10-year note auction. I usually don't pay a lot of attention to that unless it seems to have an impact on the movement of the market. Seasonality. We're neutral to positive with the Dow and S&P. We're neutral to negative with the NASDAQ. We are dealing with options expiration week, where we tend to be up 66% of the time and down for 34% of the time. We do see some negative seasonality if the market's even following that now during an election year. We look at the green dashed line. CPI is really going to, let's just hope that it's actually decisive to really give the market something to latch onto, but that rarely happens. We could be coming into a period of weak seasonality, but I've been trying to point that out for quite a while now. Also, weak seasonality during an election year. Tuesday tends to be the second most negative day compared to what happened in 2023. Wednesday is the most negative day of the week. Tom Bowley coming into an area now that his research suggests that we could see some more positive price action for the S&P. We're seeing some weakness signs in growth. Now, are we going to see more follow through? That could be easily repaired, but over the last few trading sessions, that the weakness has been coming in. The equity put call ratio had to put it back on the warning sign slide here. It is now turning back up. We have this whole list of negative divergences here, which could be rectified with a good solid up move, especially the transports. That's still just not looking very good. And we're potentially in a period of weak seasonality. Positive signs. We're still positive with the parabolic SAR. The Copic curve, it's hard to tell right now. It's right on top of its moving average. The vortex is positive, but it has been just looking rather tired lately. Small and mid-cap growth is positive, even though it has been pulling back, and the financial sector is positive. So our conclusion, we're still pulling back on lower volume. That can be taken as positive for right now. We're still above that longer term overhead resistance at about 51.11. That is still positive until we close below that. We should or possibly or could see some historical weak seasonality, and we want to look for these signs of weakness that are causing a little bit of concern right now. And that's what we're watching in the short term. In the intermediate term, we're dealing more with an overbought situation. We have a number of our indicators that are getting extreme positive. And in the long term, this is also a bit of a concern. We're still looking a little bit overbought there. And those moving averages just keep going up and up and up. And at some point, you would think that would need to be dealt with. Thank you. I really hope you found this helpful. I hope you have a great day, and I will talk to you in the next video.